We're joined by Rajeev Gupta, the Executive Director, Finance and Chief Financial Officer at KEI Industries. Good morning, Mr. Gupta. Thanks a lot for joining in. As far as your revenue is concerned, the earlier guidance was 15% revenue growth with a 20% volume growth for FY17. Are you maintaining that target, or will you raise it seeing Q4 performance? And also, what does FY18 look like?
No, still we are with the same guidance that 15% in terms of value growth is because now the end of quarter is also there. So we are seeing the 15% growth.
Okay, so 15% growth. What about margins? Is competition putting pressure on your margins, and therefore margins of 10–10.5% sustainable for you?
We will sustain the margin 10.5 plus level because our all institutional sale, all the margins on passed on basis. So if the copper price increase, we are able to pass the increased price to our customers.
All right, sir, but the EPC segment, let's talk about that. That's been doing well for you of late, but margins have been a bit volatile out there. Any word on the strategy and the road ahead for the EPC business of the company?
At present, we are having more than 2,000 crore order book position in the EPC division. In EPC, we are doing the business mainly into power and electrical side, wherein under IPDS and DDUJY we are doing the project, and some projects we are also doing for the substation job. And we are our margin is also stable because we are close to 12% EBITDA margin we are targeting in our EPC segment, including our product.
See, you spoke about some, schemes where we've seen increased allocations like IPDS, etc. Could you give us a sense of what the total order pipeline of the company looks like?
Yeah, because close to 25% of the EPC order, there are our product demand in the cable in all the EPC segment. And we are seeing the good demand from the government side because most of the orders have already come up, and we have already bidded so many contracts in various state with various state utilities. So we are quite hopeful that in next year we will also receive the good amount of contract from the governments.
All right, you spoke about some order outlook from the government. Could you quantify that for us, sir?
A number cannot be quantified because in EPC division, because there is a L1 concept, though we have participated in the bidding process more than 5,000 crore worth of tender. So it depends where we will be the L1.
Okay. Debt is also coming to far more manageable levels. Is it time to look at inorganic opportunities? Any talks that are currently underway?
Yeah, we are repaying our debt every year, and last year and this current financial year we did some capex of close to 120 crore rupees, from which we had expanded our capacity base. From here also we will grow by at least 15% in next financial year also. Whatever we are growing organically, because if we find any opportunity for merger and acquisition, we will do so, but still we don't have any case for consideration for merger and acquisition.
Okay, then there was also some concern over your working capital cycle, the working capital days. Remember, we understand when beyond that 100 days mark, what's the level now? What exactly is the target for that as well?
Working capital cycle is close to 90 days actually, but sometimes the retention money, because as our EPC sale is growing, so at one point of time it has to be for 100 days, but in future it will remain in this range only 90 to 100 days, because now we have reached to the level of wherein we are doing EPC job close to in next financial year, close to from here it will grow at least 30% in EPC division.
Okay, sir. Thank you very much for joining in. So that's the word coming in from KEI Industries.